So first of all, you need to know what is what the financial markets. You can't just go into Forex without knowing what is the financial market, how the Forex come about. So this is the basic of it all. So first of all, what is the financial market? So the financial market is where the buyers and the sellers trade assets. Mark that word, trades. Mark that word, trades. They trade what? Asset like bonds, currencies, commodities. There is a trade between one or two persons. So there must be a two persons to be for this thing to, or two pairs or two things to for this thing now to do what? To occur. There is a trade. So mark this word trade. There's a trade in between like stocks. That's the reason you see people buying stocks, bonds. Then for us now that are forex traders, you do what? You pair two currencies, buy or sell. Do you understand? That is an commodity. It is what? The backbone of the global economy, helping people, businesses, and this response. So that is not. So first of all, how did it started? So the financial market began century ago with merchant raising funds for trade as at 1602. So this financial market we are talking about started as a back century ago as at 1602. So, but the most important thing I just want you to understand here that we have different types of what? Different types of financial markets. So the forex market, it's not the only financial market that you can venture into. In case you decide to maybe go into any other financial markets. So we have what we call the stock market, where people buy and sell maybe shares of their companies like Nasdaq. Most of you now, you know Nasdaq. When you talk about forex trading, most of you think that maybe buying Nasdaq and selling those things now are part of the forex market. Maybe something like maybe commodities like maybe gold, oil. Most of you think that is forex market, but like that, with this thing now, you should be able to know better now. So types of financial market, we have the bond, we have the stock market, we have the forex market, we have the commodity market, we have the derivative market, we have the crypto markets. So the forex market is part of the financial markets. So you don't just take the forex market to be the financial market itself. No, it's part of those of the financial market that we have. So I think this information will help you better to know what you are going into as a forex trader. So what is forex market? What is forex trading? Or what is the forex market? So in a short form, I'll just know that the forex we see is what? The short form of what? Foreign exchange. The forex you see is what? The short form of what? Foreign exchange. So it's the global market where the currencies are bought and sold. It is the largest financial market in the world with over 6 trillion traded daily. So each day you wake up today, each day we wake up from Monday to Friday, there is over 6 trillion being traded on the what? On the financial markets. So it is what? One currency that is exchanged for another. For example, buying euro and while you are selling what? USD. So when you pair two currency and you are saying you are buying one, that means you are automatically selling one. That's how the financial market, the forex market works. So if I say now I'm going to maybe buy the USD, that means now once I pair the USD and the euro, that means now I'm automatically saying the other one now that I'm not buying, I'm selling it without you even saying it. So that's how simple it is now. So when you say now, okay, let's say for instance now you say Great Britain pounds versus USD, and you say now I'm buying Great Britain pounds, that means you are automatically saying now you are selling what? USD. That's how the forex market works. You are selling the other one and you are buying the other one at the same time. So, and the good thing is just that even when you are selling or when you are buying, you are making profits. We are going to get there. So the history of forex markets, so the history of forex market can be traced back to when there was trade by barter. You know what is trade by barter? Most of us, we did it in our schools when they tell us trade by barter is exchange of one thing for another. Maybe you give cow, you give goats, someone give you rice. When you give this, someone, just something is being exchanged for something. So as at the gold era, as at 1870s to 1914, that was the gold era where gold was used for as the means of trading. Then we have the second era, which was 1944, which was after the World War II, after World War II, which the United States dollar was used as a backed by what? Gold. Then we have the modern forex market, which is the 1970s to date, where currencies become freely floating, where values are being do what? We have the value determined by what supply and demand, giving birth to the forest market we have. So the forest market we have today was giving birth at 1970s. So it was as of 1970s that it was giving birth to. So we just need to know that what we do today didn't start today. So there have been traders over the years that have been doing this consistently. So if someone tell you now that the forex market will close, ask them how. How will this close? Because as far as there is an exchange, there is a currency and there is an exchange of one currency to the other, where you can be able to go to the airport today and you are with maybe your country's currency, and they will tell you, okay, now you need to change to the other currency in order for you to be able to buy what they are selling there. As far as there is still an exchange of currency, this forex market will continue to be there and to be stable. So who are the people that trade the forex market? Who are those that trade the forex markets? The number one people that trade the forex market are known as the central banks and the governments. They are the big boys and the big people that influence the market. How do the government influence the market? Because the news they give determines what happens in the market. So most times you might be in maybe most of us that have been long ago in the market, you will be in the market like this, and they will tell you NFP markets, NFP news, this news, maybe immigration news, or maybe any news at all that can affect maybe the atmosphere of the investors of that particular country. Maybe if that news comes out like this now, people go with fear, people go with trembling, and they might even withdraw their money, all those kind of things. And you see this now affecting the market. So the news of every country from the government, determines how the market is also positioned, how the market is being affected. So the government is one of the number one influence in terms of the forex trading. Then we have the banks and the institution, because they have billions that they put into the forex market, into the market, and it can shift the market direction. Then we have businesses, which are international payments that have big money. We have the retail traders. We have the hedge funds also, and I didn't like write it here, the hedge funds, and we have other maybe brokers and the rest of it. So the retail traders, which are me and you, that are in the market, that are maybe $1,000, $10,000, and the rest of it that you are putting in the market, that is not what is moving the market. What is moving the market is the big boys, which are the institutions. They are the ones moving the market. Okay, so why trade forex? Why do you trade forex? Number one, it's open 24 hours for 5 days in a week. So the forex market open 5 days in a week, 24 hours from Monday to Sunday, from Sunday to Monday. So except on weekend days, it does not open. But as far as there is any bank in the world that is open, the forex market is open. So it's what? 24 hours a day, 5 days a week. So it has high liquidity. It has high liquidity. What is liquidity? It has high money. There's money there. Liquidity is just money in the market. So it has high money. So trillion move daily, making it easy to trade. So there are a lot of trillions moving in the markets. As we said earlier on, it's over $6 trillion markets. So the market, there is high volume of money moving in the market, so it's easier to do what? To trade, unlike maybe every other markets, any other financial markets. Okay, so we have the profit both ways. You profit both ways. Like when you are selling, you are profiting. When you are buying, you are profiting. So it's not something that you say, unless when I buy, I will make profit. This is, you make profit when you buy, you make profit when you sell. So it's something that you can make profit in both ways. Then anyone with internet and small capital can even access it with the help of brokers these days. Anyone with even little capital can access the financial markets. With small as $10, $20, $50, you can access the financial market. Unlike before, where you need maybe hundreds of dollars, hundreds of thousands of dollars to access the financial markets. But with the help of leverage that most brokers give to you today, you'll be able to access the financial markets. So Forex has evolved over time. Forex has evolved from ancient money exchange to the largest financial market in the world. Today, with the right information, the right knowledge and discipline, anyone can participate and potentially benefit from trading Forex. So Forex is no longer thing that was so big that if you are not a big boy, if you don't have big money, you can access it. But now, these days, It's no longer like that. It's now something that anyone with the right information can access and be profitable with. So, and you have taken that bold step to have the right information. And I see you are the next profitable trader I'm seeing right here. Okay, so most of us now we mistake forex trading to what investment. Most of us now we even write on our bio, our investor. What we are doing, what we are speculators in the forex market. We are just traders. So what is the difference between forex trading and the investment part of it? Because you can also be investing on the forex market. There are some people that will just go to forex market and they will just maybe say, okay, this gold, or maybe they will say, okay, USD will be rising to maybe social amount in next 10 years or next 5 years. They will just put up their money, leave it there to the next 5 years. They are investing. They are not trading. So unlike you now that we put your own, you don't even sleep. You wake up early in the morning to check it up. So it's different. So trading is short term, while investment is what? Long term. So for trading is short term, while investment is what? Long term. So the difference is just very clear. For timing is short term for what? Trading, while for investment is for what? Long term. Then for goal, profit from short-term market movements. For a forex trader now, you just want to profit from the short-term market movements. But for an investor, you want to build a long-term value and security and financial security. So for someone that is an investor, you want it to be in a very high volume. Within a long period of time, you want it to be accumulate and have that base of financial security. So unlike forex traders that are most of us, we are not even patient enough. Okay, so the approach we have to do what? In forex trading, we use what we call the technical analysis and the what fundamental analysis, in which most people use only technical, but it's preferable you use both of them. But for investment, they rely basically on what? Fundamental analysis. Their most conviction, their most decision are made with the word fundamental analysis. First of all, the company performance and the economy of the country that the company resides. If they check these two things and they evaluate how far the company has gone over the years, they can be able to make their decision. But a forex trader, you need to do your chart analysis, your chart pattern indicator, your trend line, your support and resistance, your SMC, everything. They will just put it out there in order for them to do what? To ensure they make the most of their decisions before they trade. So trading is different from what investment. Then the last one now, the risk involved. Then for trading, high risk due to what? Market volatility, sorry. So the traders has high risk because the market moves fast and you need frequent decision to where maybe you have a stop loss and the market is moving to your stop loss. You have to make a fast decision. Should I go on break even? Should I close this market? You have to make a quick decision. But an investment now have low risk when it is diversified and held for long term. It does not have a high risk, unlike the world of what trading. The trading, most people they will put their stop loss and they will still go. Let me shift the stop loss. Let me do the take profit. Those things now are the risk part of it because they know they are risking money. And most people they even risk all their capital. We are still going to be talking about that when we get to that stage. So very importantly, I think this is just the basic thing. Let me recap on what we have said so far. So the first thing we talk about the introduction, what is the financial markets, which we say is where the buyers and the seller trade assets. So that is what we know as the financial market. And we have up to six words, financial markets, which are the stock market, the bond, the forex markets, we have the commodity market, we have the derivative market, we have the crypto markets. Then we came to forex and we said that the forex market is toward trading two currency pairs, like currencies, which is what when they are traded together, when they come together, they become currency pairs. So like now we have the euro, we have the USD forming together to become a currency pair. So we come to the next one, which we talk about the history. We talk about the gold era, which was 1870 to 1914. We have the second era, which is what in 1944. We have the third era, which was in 1970s to date. Then we get to the next one, which we talk about who trade Forex. We talk about the central bank. We talk about the government who trade. We talk about the banks. We talk about the institution. We talk about the business, and we talk about the retail traders, which are also known as the speculators. So we have the why we trade Forex. We have the global markets opens 24 hours a day, and we have the trillions move of the daily market, which is over $6 trillion move of the market, making it easy for people to trade. And you can earn when currencies either rise or fall when your decision is being accurate, at least for. So we have anyone can also access the internet and access the trades with using their phone. So we have the difference between the investment and the trading. So this is just the overview of what you need to know as a beginner. So in the next course now, we'll be going more in details about trading and what you need to know. So see you in the next course and see you in the next video. Bye for now.